with us. The long-expected reclassification of Nigeria into the index board of FTSE Russell in London may not happen in September. Latest report from the London-based index and analytics company says the classification exercise would be delayed to give room for further examination of Nigerian capital market activities. The main issues now is the recent launch of the T+1 transaction circle by the NGX exchange, which concludes trade deals just one day after initiation. Analysts say FTSE are worried about the short circle of trade. They want to be sure that the local boss would not run into hitches in settling trades in dollar terms. The availability of foreign exchange in major markets for liquidity transactions is also advocated. The reclassification of Nigeria in the global index was supposed to take place in September. Well, joining me for this and understanding it more is Mr. Kehinde Jones, Head Research and Strategy and Korea Securities Limited. Thank you so much. It's good to see you, Mr. Jones. It's been a while. How are you today?
I'm doing fine. What about you?
Well, I'm well, too. I'd like you to react to this information concerning a possible delay, of course, in readmitting Nigeria into the Global Markets Index Board. What do you make of it?
Well, if you look at what's going on in the market, the FSTE has now removed Nigeria from the frontier market reclassification process. Instead, what they are saying is that they have extended their review until the end of August 2026 to better understand the impact of the country, the Nigeria stock market new policy in terms of T+1 settlement cycle on foreign investors. We should not forget that the T+1 settlement cycle system has so many benefits, and that's why the Nigeria stock market came up with this policy from T+3, T+2 to T+1, saying that, okay, it will allow traders to settle faster and also reduce sentiment risk and also bring Nigeria close to international market standard. However, some foreign investors are very concerned that this shorter sentiment period may require them to have funds available before they can complete that transaction. And if you look at the market, there's some policy that also the Nigeria Stock Exchange said changed from the market closed from 2:30 to now is now closing 4 p.m. Now, custodians, foreign investors have to do some transaction in terms of operation backend, try to move their money, and all this is affecting the market positively or negatively. But the FST is saying that they need to reclassify. They are still reviewing it than what they said they would do in the month of September. So the concern also is together with the recent change in the market closing, like I mentioned, and also the recent decline in the market as investors are reacting to these new policies. So now the FST are saying by the end of August 2026, they will know whether they should go ahead with the frontier reclassification, which was set in the first day of September 2026, or they will take it back to unclassified. Because as at last month, June 2026, the market have lost nothing less than close to 8%. And that's very, very huge, from 60% down to 47% year to date. So if this issue are resolved before end of August, I believe the Nigerian Stock Exchange chance to return to the frontier market index will improve also. And also this will also increase investors' confidence in the market and attract a lot of more foreign investment and also support the recovery in terms of the stock market. Until then, investors will continue to monitor what is currently going on in the market in terms of development like price discovery. And Nigeria Stock Exchange have came out and said that they want to use the mechanism of 2018 to discover price now. That any stock that is trading below, above 1,000 now, 10,000 units will have to move it up. Below 500, 100,000 units have to do a change price. And between 500 to 100 to 1,000 naira stock, 50,000 units have to change. So there have been so many policies that the Nigeria Stock Exchange have said, but the FST have been pointing to one basic one, T+1 settlement cycle. They believe that is affecting the investors, the global investors, and this really that's why they want to put the Nigeria Stock Exchange under review till August 2026.
The fears expressed by London analysts, by you, should we take it so seriously? And why do you think they are raising issues with the T+1 settlement cycle meant to enhance our market?
So if you look at like what I said initially is that
yes,
normally the T+1 settlement cycle has so many benefits. One of the benefits is that trade will not settle much faster. It will reduce settlement risk, also bring Nigeria to international market standard. And this is a big concern also for foreign investors. You know, like I always tell people what we call Pareto optimality or Pareto efficiency. Once something is better off, another will be worse off. You can't be in the middle. There's positive, there's negative. So the negative effect is that foreign investors now have to make sure that our financial system is quicker to react to Nigerian market. For example, if a foreign investor is trying to move money to a custodial account, whether it's trading to custodial or it's trading to a nominee account or directly with like Ancora Securities Limited, they have to make sure that their operation is financial system is more robust in terms of there's time difference in different part of the world. Currently in the UK now, the time in Nigeria is the same time in the UK. What if there's a change in time by 1 hour ahead or 1 hour beyond? So most foreign investor has to do what? In terms of operation, okay, how can I transfer my money in terms of changing the dollar or pounds or naira or euro in order for me to transact or in order for me to move my money to custodial or nominee account to do business and to trade. You know, those time has basic effect. Time is key in the stock market. That's why I keep saying that now a lot of global investors tend to pull out. Price discovery is happening in the market. Profit taking is happening in the market. Sectoral rotation is happening in the market. Portfolio rebalance is also happening in the market. That's why you're seeing the month of June 2026, the market lost more than 7%. And as of today, the current market, already have lost 10% currently in the market as we speak, currently at the market. So this is having a negative side effect for global investors. So for in Ancora Research, what we believe is that the recent market correction have reflected a market dynamic beyond the FST. We believe that. So in the month of June 2026, we've seen that about 13.3 trillion naira have been lost in terms of market capitalization, and the market all share index have declined about 8.28%. So it's not only just because of FST reclassification, sell-off were majorly because of profit taking, rebalancing of portfolio, and going forward, we believe by next month we expect that dividends announcement, portfolio rebalance will also attract the foreign investors if liquidity continue despite this correction. So the participation by foreign investors will surely want to continue if the market is on green note.
Interesting stuff. Oh, finally on this, before we talk about markets generally, already touched on it. If Nigeria fails to get back on that index by September as expected, do you think it will have any implication for us, for the economy, trade, and investment?
Of course. So one of the key part of what we should notice is that the retail investor, the institutionals, the HNI, the PFAs are not only the one in terms of local investors, are not only the one participating in the Nigerian stock market. The global investors also participate. However, the local investors has more shares, more participation than the global equity, than the global investors. If the global investors' participation keep depleting, just the way we are seeing, it will affect the foreign exchange. Foreign exchange is currently close to 1,390. It's part of what we are seeing. It will affect our economy in terms of FPI, FDI inflows that is coming in. And if foreign investors see, one thing we should notice is that we analysts tend to look at what is going on in other economy to benchmark it with what will happen in our economy. Because Nigeria economy is a frontier emerging economy. We believe that by then, if we want to achieve $1 trillion economy, the stock market, the capital markets need to participate heavily. And that's where financial infrastructure need to play, because Nigeria financial system is still lacking that infrastructure, financial infrastructure, in terms of how fast can you move money. So that's why you are seeing FST saying all this. In the part of London where I am, you will notice that before you move money, is a tip of, you can just move money very fast within 1 second, 2 seconds. That's why those fintech banks in Nigeria are coming up with this financial system. So that's what you are seeing in the market. So if you are doing T+1 and this financial infrastructure, there's huge financial infrastructure gap. I think it won't work for global investors. So for me, to answer your question, it has a negative effect if they downgrade the market from what they are saying before, from frontier reclassification to unclassified. I'm sure a lot of global investors will want to pull out from the market.
Well, looking at Nigerian market now, in your own understanding, before we come home, let's look at the global space. Considering what is happening with U.S. and Iran, ceasefire, we see crude oil prices dropping. What is your take with regards to the state of the global market, and maybe also coming back home to Nigeria?
So in terms of global market, if you look at what's going on, the S&P 500 currently is trading this week about 1.37%. And what this tells us is that now that the crude oil is trading around 73 to close from $65 per barrel to $73 per barrel from last week to this week, we are seeing some changes, because most of this the global market is rebounding, because most of the US market is more driven of technology, AI infrastructure, just like Microsoft, Amazon, and Alphabet trading. And we keep seeing it. If you look at today, the market in terms of US stock have lost, S&P 500 have dropped about 0.6%. Nasdaq have also lost about 1.5%. So in terms of US and Iran, if the agreement or the proposed negotiation came to a positive note, we expect that the market will surely want to rebound in positive momentum. So that's why you're seeing that a stock like Apple is currently gaining about 0.8%. Technology stock, Amazon is losing about 1.17%. And also Meta is also gaining just now about 6.57%. Tesla is doing well, 0.368%. And these are stocks that are moving the US market based on AI-driven technology, financial services, and the rest.
So back home in Nigeria, what would you say about the market? We saw a bit of sell-off sometime last week. Well, it's been that flip-flop again. What's your understanding of that?
Well, let me start from today. The market is bearish today. As I speak, the market is really currently doing a negative of 1.24% loss, bearish momentum, very bearish. Already I've lost nothing less than 10%. Downside, I've lost nothing less than 7% as I speak. And also Stanley, I've lost about 4%. So we are seeing banking sector, industrial sector. We are seeing the banking industrial sector, the consumer sector, also IT and communication like MTN, they've lost. So, however, this is the best time. I keep telling investors that this is the best time to invest in the Nigeria stock market, now that they are trading. So what we are seeing in the market is beyond profit taking, price discovery. A lot of people, just like us in Aqua Research, Aqua Securities Limited, Aqua Asset Management, we've done a lot of evaluation on some particular stock. That's why when we push out the stock recommendation, you keep seeing that we value some stock and we say buy, hold, and sell. So what we are not doing is that a lot of investors are not doing price discovery, saying that, okay, this stock is supposed to be trading this price, it's not supposed to be trading this price. However, from last week to now, when all these major stocks, mostly NGX 30 stock, we should not forget is that the NGX 30 stock accounts for more than 70% of the market capitalization. What are the NGX 30 stock? We have Transcorp, we have Fidelity Bank, we have Dancel, we have WAPCO, we have GTCO, we have Zenith, we have Ade, and the rest. The NGX 30 stock account more than 70%, more than 70%. as at last week now, we've been seeing that some insurance stock have been gaining. And the reason because it's banking hunting that, okay, some large cap stock are losing. Where can I put my money? So investors are still looking at where they should put their money. Even though money market instrument, 90 days, 180 days, 364 days are being oversubscribed. Now, DMO is saying that quarter 3, they are trying to mobilize about 4 trillion. So even though they want to mobilize 4 trillion, I'm still optimistic that a lot of investors want to come back to equity market to take advantage of the equity market.
All right, then. Well, it's a good way to let it go. Now, thank you so much, Mr. Kehinde Jones. Thanks for your time. The head research and strategy at Ancoria Securities Limited. Thanks for your time.